I'm observing something happening to Federal Reserve independence that scares me more than any market crash I've witnessed in my 70-plus years of investing. The direct political threats against Chairman Powell, the lawsuits being threatened, and the demands for his resignation represent systematic destruction of central bank credibility that took decades to build and can be lost in a matter of weeks once markets lose confidence in monetary policy independence from political pressure. What's got me really concerned isn't the immediate political theater we're seeing play out on social media and cable news. It's the long-term compound damage being done to institutions that have protected American capital for generations. When politicians start treating the Federal Reserve like just another government agency they can bully into submission, we're talking about fundamental changes to how global capital evaluates dollar stability and American institutional reliability. Let me be crystal clear about what's at stake here. The Federal Reserve's independence isn't some academic concept that only matters to economists and policy wonks. It's the bedrock of dollar credibility worldwide. International investors park trillions in dollar-denominated assets specifically because they trust that American monetary policy won't be hijacked by short-term political considerations. Remove that trust, and we're talking about systematic capital flight that would make the 2008 financial crisis look like a minor market correction. I've been around long enough to remember what happens when central banks lose their independence. I watched Turkey destroy its currency and economy when President Erdogan started firing central bank governors who wouldn't cut interest rates fast enough for his political timeline. I saw Argentina's peso collapse when their government couldn't resist the temptation to print money to fund spending programs. Every single time politicians get their hands on monetary policy, the result is economic disaster that hits ordinary Americans hardest. The threats against Powell aren't just inappropriate, they're economically destructive in ways that compound over time. When markets start pricing in political interference in Fed decisions, interest rates have to rise to compensate for the additional risk. That means higher mortgage rates, higher business borrowing costs, and lower stock prices as investors demand greater returns to account for institutional uncertainty. The mathematics are unforgiving. Destroy Fed independence, and everyone pays higher borrowing costs for decades. Here's what really gets me fired up about this situation. The Federal Reserve has spent 40 years rebuilding credibility that was lost during the 1970s inflation disaster. Paul Volcker had to put the economy through hell to break inflation expectations and restore confidence in the dollar. That credibility is worth trillions in lower borrowing costs for American businesses and consumers. It's the reason we can run budget deficits that would destroy smaller countries. And now we're watching politicians threaten to throw it all away for short-term political gain. The lawsuit threats are particularly dangerous because they represent systematic intimidation of Fed officials who are trying to make technical decisions about interest rates and monetary policy. When central bankers have to worry about legal harassment every time they make a decision that politicians don't like, they stop making decisions based on economic data and start making them based on political pressure. That's not monetary policy. That's political theater with devastating economic consequences. And I keep hearing politicians claim they're not trying to interfere with Fed independence. They're just exercising their constitutional oversight responsibilities. That's hogwash, and anyone who understands how central banking works knows it. There's a world of difference between legitimate congressional oversight and direct threats against Fed officials for making policy decisions. When you're threatening lawsuits and demanding resignations because you don't like interest rate decisions, you've crossed the line from oversight into intimidation. The global implications of this Fed independence crisis extend far beyond our borders. Foreign central banks hold over $7 trillion in Treasury securities specifically because they trust Fed independence to maintain dollar stability. When that independence comes under attack, those foreign buyers start looking for alternatives. The European Central Bank, the Bank of Japan, even the People's Bank of China, they're all watching this situation and adjusting their reserve policies accordingly. China, in particular, is loving every minute of this institutional chaos. They've been trying for years to undermine dollar dominance and establish the yuan as an alternative reserve currency. Every time American politicians attack Fed independence, they're handing Beijing propaganda material that writes itself. How can we lecture other countries about rule of law and institutional integrity when we're threatening our own central bank independence? The timing of this crisis couldn't be worse from an institutional stability perspective. We're already dealing with massive federal debt levels that require international confidence to finance at reasonable interest rates. We're facing geopolitical tensions with multiple adversaries who would love to see dollar hegemony collapse. And now we're adding central bank independence concerns on top of these existing vulnerabilities. It's like setting fire to your house while a hurricane is approaching. What really concerns me about the current situation is how quickly institutional norms can collapse once political actors decide they don't have to respect them anymore. The Fed's independence has been protected by informal agreements and institutional traditions more than formal legal barriers. When those traditions break down, the legal protections often prove inadequate to maintain independence under sustained political pressure. The Federal Reserve Act gives the Fed considerable independence, but it also gives the president appointment power and Congress oversight authority. In a constitutional crisis where political actors are willing to push boundaries, those formal authorities can be weaponized to destroy practical independence even without changing the law. When politicians threaten endless investigations, budget cuts, and legal harassment, they can effectively control Fed policy without technically violating the Fed's legal independence. I'm particularly worried about the precedent being set for future administrations. If threatening Fed officials becomes normalized political behavior, every president will feel pressure to intimidate the central bank when monetary policy doesn't align with their political timeline. That's a recipe for systematic politicization of monetary policy that would destroy dollar credibility and American economic competitiveness for generations. The market implications of systematic Fed independence erosion are staggering when you think about them in compound terms. Right now, American businesses and consumers benefit from interest rates that are artificially low because of institutional credibility built up over decades. If that credibility gets destroyed, we're talking about permanently higher borrowing costs that would reduce economic growth, business investment, and household wealth accumulation for the indefinite future. International investors are already starting to price in political risk premiums for dollar-denominated assets. I'm seeing it in currency markets, treasury auctions, and international capital flows. Foreign buyers are becoming more cautious about long-term dollar commitments because they're not sure American institutions will maintain their current stability. That caution translates directly into higher borrowing costs and reduced international demand for American assets. The banking sector implications are particularly concerning because regional banks depend on Fed stability for their funding costs and regulatory predictability. When Fed independence comes under attack, bank stocks get hammered because investors start pricing in political interference in banking regulation and monetary policy. That makes it harder for banks to raise capital and maintain lending growth that supports economic expansion. The pension fund crisis gets even worse when Fed independence is threatened because public pension systems depend on predictable long-term returns to meet their obligations. Political interference in monetary policy creates additional uncertainty that forces pension managers to assume higher risk or accept lower expected returns. Either way, it makes the existing pension underfunding crisis worse and increases the likelihood of systematic pension failures. International trade relationships suffer when trading partners lose confidence in dollar stability and Fed independence. Countries start negotiating bilateral trade agreements that bypass dollar payments when they're worried about American monetary policy becoming politicized. That reduces demand for dollars and undermines the privileged position American businesses enjoy in international commerce. The defense implications of Fed independence erosion extend beyond immediate economics toward questions about American capacity to finance military operations and alliance commitments. Defense spending depends on the federal government's ability to borrow at reasonable interest rates, and that borrowing capacity depends on international confidence in dollar stability and Fed independence. Undermine the Fed, and you undermine national security funding capacity. What frustrates me most about this whole situation is how preventable it is. The Federal Reserve has been one of America's most successful institutions for maintaining economic stability and international competitiveness. Fed independence has served Republican and Democratic administrations equally well by providing credible monetary policy that supports long-term economic growth rather than short-term political objectives. The politicians threatening Fed independence seem to think they can intimidate the central bank into policies that support their immediate political needs without considering the long-term consequences for American institutional credibility and economic competitiveness. That's exactly the kind of short-term thinking that destroys wealth and undermines the institutional foundations that support prosperity and security. I keep coming back to the mathematical certainty of what happens when central bank independence gets destroyed. Every country that has gone down this path has seen the same results: currency instability, inflation crises, capital flight, and systematic economic underperformance that lasts for decades after the immediate political crisis passes. The compound effects are devastating and irreversible. The solution here isn't complicated, but it requires political leadership that values institutional integrity over short-term advantage. Politicians from both parties need to publicly recommit to Fed independence and stop the systematic intimidation campaign against central bank officials. Congress needs to clarify the legal protections for Fed independence and make it clear that political interference in monetary policy is unacceptable regardless of which party is in power. Markets reward institutional stability and punish political chaos with mathematical precision that compounds over time. The systematic destruction of Fed independence represents institutional vandalism that will cost American businesses and consumers trillions in higher borrowing costs and reduced international competitiveness. We need to stop this institutional destruction before it reaches the point where the damage becomes irreversible and we lose the privileged position that Fed credibility has provided for generations.